Hi, everyone. Today, let's talk about OPEC cutting output once again. Then we'll go over the Tesla deliveries report. Then we'll hit the economic calendar. Then we'll go over the charts. Then we'll go over my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So OPEC cut output, and analysts are now forecasting $101 per barrel. You can see oil prices spiked. U.S. Standard was up 6.6%, and oil was around $80 a barrel. XOM and Chevron both rallied on the day. Shell was up quite a bit. BP also did well. Basically, all the oil producers did pretty well. And even Berkshire Hathaway was up 0.5% because it owns 23% of Occidental Petroleum. They said OPEC is voluntarily planning to reduce its output by 1.1 million barrels per day, which obviously is going to put pressure on oil prices. They say that the Saudi government is not directly siding with Russia, but it kind of seems like they are. They certainly could be just taking advantage of the fact that Russia is not really available in terms of oil production and purchase for the global economy, and that really makes them kind of a monopoly here in the oil market, and they're flexing that to the upside for themselves. They're raising oil prices, which raises their profits. And as long as they have a pretty strong monopoly on global oil production, then they're going to have power like this. Overall, this puts forecasts up around $100 a barrel, which is about 20% upside from current prices. Moving over to Tesla here, they announced their deliveries, 422,875 vehicles delivered and 440,000 produced. And the stock was down 6% on this news. This represented a 4% growth in deliveries over the previous numbers, which is not very much for Tesla. And what this is making people think is that they're going to have to cut prices to continue to deliver more and more vehicles. We mentioned here, reductions were already implemented in the United States. And they say many investors believe that the recent price cuts reflect a structural cost advantage that will enable it to pressure its rivals and capture outsized volume and dominate the EV market. Price cuts have and will undermine their ability to be profitable. So double-edged sword, they're going to sell more vehicles and they'll continue to squeeze competitors, but they'll probably make a few less dollars on each individual vehicle in order to keep their growth going. In terms of price targets, Bernstein has a $150 price target, which is up around the $193 range. Just for quick reference here, GM sold 20,000 vehicles in terms of electric vehicles for the last quarter, which was obviously a record for them. Overall, they delivered 603,000 vehicles, so still higher than Tesla. But if the future is electric, they do have a long way to go to compete effectively with Tesla. Moving over to the economic calendar, you can see ISM manufacturing came in less than expectations, and we'll see that on the charts. The market responded very negatively to those numbers. And tomorrow here we have the JOLTS report at 10 o'clock Eastern. So keep an eye on that. The markets will be open when this is announced, and there will likely be another strong reaction the same way that we had the ISM manufacturing numbers. So keep an eye on that. If this comes in weaker than expected, markets might rally, signaling a potential Fed pause. But if this continues to be strong, it could cause the Fed to go more in the quarter point raise direction here for the May meeting. And lastly, for articles here, I just want to mention the fact that house prices actually went up in February for the first time in several months. They went up by 0.16% on a seasonally adjusted basis. And this could be contributed to mortgage rates pulling back at least a little bit, allowing home buyers to go forward with their purchases. Overall, house prices are still down 2.6% from their peak in June, but this is one of the strongest months since May of last year. Moving over to the charts, starting with the S&P 500 here on the hourly and the daily, you can see the trend is still intact. We're still making new highs here on the S&Ps. The S&Ps actually outperformed here, probably because the oil stocks were doing so well. You can see we do have some divergence on the hourly chart, which is interesting, but the daily chart still continues to look strong. Next, overhead resistance sitting at about 314, 313 in this zone at trend resistance. We're now above the 909.29 level. You can see we interacted with that multiple times here today and then eventually stayed above it and rallied into the close. So still looking strong on the trend for tomorrow's session. Indicators showing that we might be finding a top in the near future, but you have to respect the trend at least until it breaks down. And right now it's definitely intact. We're above the 9 EMA. We're above VWAP. We're way above all of the EMAs here on the daily chart. Momentum is strong. RSI is still strong. Everything's still bullish here on the S&Ps. Moving over to the NASDAQ here on the 15-minute and the daily chart, you can see we gapped down, rallied it a little bit here, filled the gap, broke down, double bottomed, and then rallied into the close. So interesting price action here, but inside day on the daily chart definitely looks like an area where we're probably going to see more pullbacks tomorrow, in my opinion. Definitely looks like a weaker day compared to what we've had. You can see the short-term EMAs and VWAP chopping around here now. Certainly looks like we could find a little bit more downside to 315.59, certainly possible. Upside is still 321.81, and then we have major upside resistance at 325.28. And then if that 15 level breaks down, then we're looking down at 314, and then below that is 310.81. So lots of room for movement here. Right now we're neutral on the NASDAQ until we get a break one way or the other. But based on this rally that we've had, plus the inside day, it does seem like down is more likely for tomorrow's session. Moving over to the Russell and the Dow here on the daily chart, you can see the Dow taking off to the upside, retesting the highs, going back to 6 March. This is because of that OPEC decision, oil companies leading the Dow to the upside. The Russell, on the other hand, got a candle of indecision, did come all the way down and test the 21 EMA here on the daily chart. Taking a look at the shorter time frame on the 15-minute chart here, you can see that huge move that we had on the ISM manufacturing numbers. Took off to the downside, found a nice bottom at the 144 EMA, came in, tested this zone, found support, and then rallied above. So overall, still bullish. It is technically neutral on the day, candle of indecision on the daily chart, but the rally into the close looks strong, and we are above this nearest support levels, and you should expect that this could go higher tomorrow. And then the Dow, gap up, rally, and you can't really bet against this in the short term. Certainly could get back all the way up to 341, 342 based on this huge movement that we've had. But remember, area of highest volumes at 338.79. Nothing but bullishness here on the Dow. Moving over to Apple and Tesla, starting with Apple on the daily chart. Another green day, looks very bullish. Looking to the next resistance at 167. We didn't get there today, so you should expect to get there at least tomorrow. If we get through there, looking at 170.90. Everything's still very bullish here on Apple. If we pull back, looking at 164.50. Below that, looking at 162.80. We did get back into overbought conditions here on the daily chart, but we could still go higher, and this is still a very strong bullish trend. Moving over to Tesla on the 4-hour, you can see we had that strong close on Friday, gap down, fell. So we have a gap left here from Friday, and we tested the longer term trend here, and then we found a little bit of support into the close. Looking to see what happens here at the area of highest volume. If we can get above that, looking to 197.75. And then above that is 203.80. If we break this level, then we're looking down to 188.50, which coincides with the 200 SMA here on the 4-hour chart. Overall momentum bearish on Tesla, lots of bearish volume here today. And looking at volume on Apple, it is worth noting that there was pretty low volume here on this rally compared to what we've been seeing during the previous rallies. Moving over to staples versus discretionary here, you can see staples absolutely relentless to the upside, getting very close to these previous highs, up around $76. That's the next resistance that I'm watching. And then up here at $77.50 would be your next level. Support sitting down at $74, but right now, super bullish. RSI, super bullish. Momentum, super bullish. Moving over to discretionary, we got an inside day candle of indecision. This looks super bearish going into tomorrow's session, and I would expect that discretionary is going to move lower tomorrow, which again indicates to me that there's probably some weakness in the market with staples outperforming massively and discretionary starting to pull back a little bit. Moving over to energy and healthcare, you can see energy gapping up, rallying. Oil and gas ETF was similar. We talked about that with the oil and gas stocks pushing up much higher here, with oil expected to go higher. This is a fundamental shift in the markets, and you can see that developing here. Looks very bullish, looking at 87.37 for your next resistance, but it seems unlikely that that would hold. Looking to get up to 90.90 here at your next resistance. Looks very strong. Energy and oil and gas looks very strong. Similarly here on healthcare, you can see big pushes up, especially here today. Healthcare outperforming. Overbought conditions on the 4-hour chart, looking at that 31.23 level, and the 200 SMA sitting at 31.84. Above that, looking at the area of this previous consolidation high here at 133.59. So healthcare and energy looking very strong, along with staples, discretionary, pulling back a little bit along with technology. Looking at transports here on the hourly and the daily chart, you can see we've been rallying aggressively, gapped down and fell, found support at 224.20. Then we got above the 200 SMA here on the hourly chart, still below VWAP though, so looking to see what happens there. If we can rally, make new highs tomorrow, then the trend continues. But looking at the daily chart, we came down, tested that longer term trend, and certainly could rally from here. Looking at the 55 EMA here on the daily chart, 229.60, that would be interesting. That would be the lows from this consolidation right here as well. But right now, this looks a little bit weaker on the daily chart. If we get below that trend line here, then we're looking at 223 back at the 200 SMA on the daily chart. And then the area of highest volume sitting at 222.30 or so. So watch those levels to the downside, 55 EMA to the upside. Some bullish RSI ticking down here a little bit. And RSI on the shorter time frames is ticking down much stronger. You can see we found that support at the 50 level on RSI. So it's certainly an area where you could bounce. But right now, I would expect that this is going to go at least a little bit lower. Volume on the last candle of the day was pretty strong, which was a green candle, so keep that in mind. But shorter time frames are starting to show a little bit of weakness here on transports. Moving over here to semis just for a moment on the 4-hour and the daily chart. Basically sideways, big down candle on the open, up candle on the close, candle of indecision on the day. Certainly could go lower here tomorrow. Seems possible. Momentum got a step down. Momentum on the 4-hour definitely looking weak, but RSI did tick up at the end of the day. If this is going to go lower, you want to see it hold below the SMA and cross below the SMA here on the daily chart. Certainly seems like we could move lower tomorrow, but remember, this is still a very powerful trend. You don't want to be caught on the wrong side of that. The long-term trend is still very bullish, and even the shorter-term trends are still pretty bullish, even if we had a little bit of a down day here today. Moving over to yields here on the 2-year and the 10-year on the daily chart. I haven't been covering these a lot because they really haven't been moving, but here today we did have a pretty big step down. We're below all the EMAs and SMAs on the daily chart. Certainly looks like we could come down and retest some of these levels. RSI still weak, well below the 50 line, so it looks good. Similarly here on the 10-year, big step down below support at 342, looking at 3.325 for the next support, which does kind of coincide with this trend line here. Over the next couple days, I would expect this to come into contact with that. Looking at the 2-year here, you can see we're below all of these previous lows for consolidation. Now we're looking at the most recent lows that we've had as the next major support here. Yields starting to sell off here a little bit, which should allow bonds to rally into the near future. Moving over to stocks above their 20-day and 50-day averages here. Looking at the 20-day to start, you can see we're up in that upper level here, area where you can definitely hang out for a little bit. But rallies do tend to fade, and then you see that sell-off back down to these lower levels. We did get into that same lower level, rally back up into this overbought condition, if you want to call it that. But remember, just like we did here from October, November, all the way into December here, couple of months where we were holding in this level before we got that waterfall sell-off. So just because we're here doesn't mean that it's going to sell off, but it does mean that some of the larger rallies might be basically complete. Looking at the 50-day average, we're definitely not in those super overbought conditions, but it doesn't look like we're going to waterfall off quite yet. Momentum still moving in the bullish direction, but this certainly wasn't a day where you would expect a huge push up the next day. Could be a candle of indecision, could be a sell-off day tomorrow, could go either way here on the 50-day average. Moving over to the dollar just for a moment, continues to chop in the zone, continues to hold this level. Not much to say, no real developments. If this does break down below this level, then we could see equities start to gain a little bit of speed. That would be interesting. And it might be the catalyst that we need to make a little bit higher highs from where we are right now. So keep an eye on this. Not doing much right now, but certainly at a level worth watching. Moving over to high yields here, similar thesis to growth, gap down, fell, found a little bit of support, rallied into the close, retested this trend line here, and then we stopped right at that level. Certainly looks like an area where you could continue to sell off, breakdown, retest, continuation type move. Certainly possible. Big up day on Friday. Inside day here today, again, looks like a setup where you could see more downside, similar to what we saw here. Upside, inside day, down move. Not necessarily going to be that dramatic, but it could happen here. Worth watching. Watching this trend line very closely. We're at resistance. And if we do break down here, looking at $91.40 for your next support. And then below that, $91. Once again, that key level that we've been watching. Then $89 back down here at the lows. Overall, junk looking a little bit weak. which means that growth is probably looking a little bit weak as well. Moving to TLT here on the 4-hour in the daily chart, you can see we gapped down from the 200 SMA, found support at the 9 EMA, and then rallied and closed above the 200. So looking bullish here on the daily chart, momentum bullish, RSI bullish, everything looks good here. The continuation to the upside. Certainly some levels of resistance in this key consolidation we had up around 107.50 or so. And then we have that most recent high up around 109. So certainly some levels to get through, but right now momentum looks very bullish. Strong consolidation and hold at this 104.21 level. The downside quickly rejected, looks bullish going into tomorrow's session. Moving over to the VIX here on the daily and the weekly, I just want to highlight this on the longer time frames a little bit. You can see the daily stopping right at support once again. Bit of a fake out, gapped above the trend, and then fell back into the trend at support here. Momentum did step down just barely here. Looking to see if this is going to break out tomorrow. If it's going to happen, it's probably going to happen now. Otherwise, we're going to get a break below the 1850 level. That would be very bullish for stocks, but it seems more likely that we're going to get a breakout to the upside on the VIX. If we do get a breakout, looking up around $21 at this most recent trend line. And then above that, you have 2250 once again. And then above that, looking at the 200 SMA on the daily chart, 2380. So a couple of key levels to watch here if the 1850 level holds, which it does kind of look like it might. Moving over to my accounts here, another pretty good day, up a little bit more than 440 on the day. Starting to claw back some of those losses over the first quarter of this year. IWM, I ended up cutting this position short. I should have held it through the close. Would have been a pretty good trade. I took profits at about $40 out of the $70 that were available. So not bad on the 177 put from today. And I opened a 176 here for Wednesday for 44 cents here. Looking to buy the stock a little bit lower. Again, should have held it. Would have been fine. But otherwise, looking at the NASDAQ here, actually traded fairly well. So I took profits early on my 318 puts going into the day. And then I was able to pick up a 317 put for 35 cents, which was max profit there. And then I picked up a 314 put for tomorrow, which was almost max profit. That was a really good trade. Got in really low on the day. And then a 316 here later in the day for 33 cents. Ended up piling up to quite a bit of money. And then the calls that I had going into the day, here at a $200 profit, probably should have taken those off, but I do think the NASDAQ looks kind of weak going into tomorrow's session. So we'll keep a close eye on this one. If the market continues to show weakness tomorrow, then maybe I'll hold these and go to a full profit. That would be about $400 at $1.87 per contract on that one. And then the XLE shares, obviously doing huge profits. I can't roll these out for a decent credit here yet. I'll look at the end of the week to see if it's worth rolling here to try to get a little bit more out of this position with the big gap up that we had here today. But otherwise, everything's going pretty well. For the NASDAQ, still trading pretty conservatively to the downside, looking to get lower and lower entries on these put positions and holding some calls. So basically neutral on the NASDAQ and still slightly bullish here on the IWM. And really the top performer was the Dow, followed by the SPY for today. So keep an eye on that. Dow looks strong. S&Ps look okay. And really the NASDAQ looks a little bit weaker going into tomorrow's session. Let me know down in the comment section what you thought of the Tesla deliveries or the OPEC decision. Is the JOLTS report going to come in hot tomorrow? Or are we going to see more dovishness from the Fed? Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.